8.7%. This is how much U.S. stocks have returned on an annualized basis since 1776. According to the latest report by Bank of America's chief investment strategist for global research. What about Treasuries and inflation? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well, and happy 4th of July. So, fun fact for those of you who've been with us for quite some time. I actually wasn't born in the U.S. I came here when I was around 3 years old and became a naturalized citizen when I was 16. And the day that I passed my citizenship exam still remains one of the proudest days of my life. And as the saying goes, the rest is history. So, our country is celebrating its 250th birthday this weekend. And we thought, what better way to join the celebrations for a channel like ours than to take a quick look at how well investors in the U.S. market would have done over time and compare it to where we stand today. So, with that in mind, here are the 3 topics I'll be covering today. 1. How well have stocks and treasuries performed since independence? And how does inflation now compare to its 250-year average? 2. Where did Treasury yields close out the week? In our 2 most recent videos on money market funds, short-term Treasury ETFs, JAAA, and more, all linked below for your convenience, we talked a fair bit about the potential options for parking your liquid cash. Today, we're going to focus a bit more on medium and longer dated options for those of you in our community who want to lock in the current rates, which remain at fairly attractive levels, despite having come down a bit from their highs in mid-May. 3. How much more can you earn with multi-year guaranteed annuities, MYGAs, from top-rated insurance companies? Annuity rates generally track interest rates, which means that annuity rates are also at very good levels right now. Some 3 to 7 year MYGAs remain above 5%, even with some of the highest rated insurance companies. The highest rate we have in this section of today's discussion is 5.4% on a $100,000 7-year MYGA from an A-plus insurance carrier. These 2 sections together should provide some insights for those of you who are laddering MYGAs and treasuries for a safe, stable, and predictable income stream in the base part of your portfolio that hopefully lasts a lifetime. And remember, tomorrow, Sunday, July 5th, is the last day of our Independence Day sale. Visit our website at www.diamondnestegg.com and use coupon code BONDS2026 at checkout to grab your $100 discount on our VIP investment club and bond courses. And let's dive in now, folks. How well have stocks and treasuries performed since independence? And how does inflation now compare to its 250-year average? Michael Hartnett, Bank of America's chief investment strategist for global research, calculated some average annual indicators for the past 250 years for his most recent Flow Show research note. And based on his analysis, here's how stocks and treasuries have performed over the past 250 years. U.S. stocks showed an annualized return of 8.7%. The 10-year Treasury was not that far behind at 5.1%, and total U.S. GDP grew at 6%. Do note, though, that these numbers all reflect nominal returns, meaning before inflation is deducted. So to get to the real returns, if that's what you want to compare, you need to deduct inflation, which was running at an annualized 2.5% since independence. And as we always say, past performance is no guarantee of future results or outcomes. And very long-term statistics like these here should always be taken with a grain of salt. Nonetheless, let's compare the annualized averages over the past 250 years with the latest available data at the time of this taping on July 3rd, 2026. As our Diamond NestEgg community knows all too well, the stock market has had a very strong run, and the S&P 500 is up 20.2% over the past year. This outperformance of the 250-year average by a multiple may or may not support the suspicion or fear that we may be in the middle of a tech bubble. The 10-year Treasury, on the other hand, is currently yielding about 4.5%, a bit lower than the historical number, but still in the ballpark, I would say, and still at very competitive levels when compared to the last 2 decades. Nominal GDP grew at 5.8% in current dollars before inflation, as per the latest data from the Bureau of Economic Analysis. This 5.8% happens to be very close to the 250-year average of 6%, as you can see here. The one outlier is inflation. The latest year-on-year number for the Consumer Price Index from the Bureau of Labor Statistics shows inflation running at 4.2%, noticeably higher than the long-term benchmark. We're clearly still seeing the effects of the current conflict with Iran and its impact on oil prices here. So, what do you make of these numbers that we've just shared with you? Do you think stock market and Treasury returns and/or inflation will go back to their long-term averages anytime soon? Or are the latest innovations in tech and AI going to keep pushing markets upwards and onwards? Drop a comment below and let me and Marcus know. And let's move on to the next part of today's discussion. Where did Treasury yields close out the week? So, for those of you who are laddering MYGAs and Treasuries in the base part of your portfolio for a safe, stable, and predictable income stream that hopefully lasts a lifetime, let's kick things off with Treasuries and take a look at Treasury yields from this past Thursday across all the maturities that the Treasury issues at auction. This row shows where they closed out the week on July 2nd, 2026. The markets were closed on Friday, July 3rd, 2026. This row here shows the increase or decrease in rates over the past week. And this row here shows the increase or decrease in rates since January 2nd, 2026. Increases in rates are shown in green and decreases in rates are shown in red. As you can see, everything remains below 5%, although just slightly for the 20 and 30-year Treasuries at 4.99 and 4.98 respectively. The middle maturities are all below 4.5%, with the 10-year just 1 basis point shy at 4.49%. That said, in the big picture, Treasury yields across all maturities remain at attractive levels compared to the past 20 years, and with the exception of the 1 month, also above where they were at the beginning of the year. But it's hard to say where this may be going. A lot will depend on both Iran and our largest tech companies, so these are clearly two things to keep watching. And if you're interested in watching with us and continuing the conversations with me, Marcus, and our Diamond NestEgg members on other safe ways to generate additional income in 2026 beyond what Treasuries and annuities can pay, either via preferred shares, international bonds, high-yielding bond funds, and other investment vehicles, come on over and join the growing member community in our VIP Investment Club. As I mentioned earlier, our Independence Day sale ends tomorrow, Sunday, July 5th. So there's just 1 day left to save. Use coupon code BONDS2026 at checkout to grab your $100 discount. Visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to join us today. The coupon code BONDS2026 can also be used through Sunday, July 5th to get $100 off of our popular bond course bundle and individual bond courses. I've also linked everything below this video for you. So, back to Treasury yields. Keep in mind that these Treasury numbers give you a general feeling for where rates currently stand along the maturity spectrum. The yields that you may get when you buy at a specific auction or from a specific broker or when you sell will likely differ from what's shown here, depending on when you're transacting. And let's move on now to the next part of today's discussion. For those of you who don't mind giving up on some liquidity for potentially higher yields than what Treasuries can offer that are still safe. How much more can you earn with multi-year guaranteed annuities, MYGAs, from the top-rated insurance companies? Here are some illustrative sample MYGA rates from an A++ versus an A+ insurance company that we work with. Remember that A++ is the best credit rating that an insurance company can get from AM Best, meaning the MYGAs from the A++ insurance company that we're about to share with you are the lowest risk, making them the most comparable to Treasuries in terms of risk-return profile. And A+ is the second best credit rating that an insurance company can get from AM Best, so still very safe in the overall big picture, generally speaking, but maybe not as safe as Treasuries, especially if you were to go above the protection limits of your state guarantee association. In this top section, we'll go through what the numbers look like for an A++ insurance company. And in this bottom section, we'll go through what the numbers look like for an A+ insurance company. Here you have the investment amount required, and here you have the guaranteed MYGA term from 2-year all the way up to 7-year for the A++ insurance company, and for a 3-year MYGA, 5-year MYGA, and 7-year MYGA for the A+ insurance company. For this A++ insurance company, rates on the 2-year MYGA are the same as last week. Rates on the 3-year and 4-year MYGAs are 25 basis points higher than last week. Rates on the 5-year MYGAs have stayed the same, and for a $100,000 investment, you might be able to get 5% on a 5-year MYGA, about 76 basis points more than a 5-year Treasury, which is paying 4.23% at the current time. Rates on the 6-year MYGAs are down by 10 basis points this week, but for a $100,000 investment, you might still be able to get 5.05% right now. Rates on the 7-year MYGAs remain stable. So for a $100,000 investment, you might be able to get 5.2% currently, about 85 basis points more than a 7-year Treasury, which is paying 4.35% at the current time. And of course, if you were to invest more than $100,000, those rates would be even higher. For a $1 million investment, for example, you might be able to earn 5.05% on a 5-year MYGA, 5.1% on a 6-year MYGA, and 5.25% on a 7-year MYGA. And if you have more than the amounts shown here, say north of $10 million, your rate might go as high as 5.15% on a 5-year MYGA, 5.2% on a 6-year MYGA, and 5.35% on a 7-year MYGA with this A++ insurance carrier this coming week. As always, keep in mind that the MYGA rates in this table are illustrative, dependent on a number of factors, and subject to change at any time without prior notice, and that your personal rate and conditions are not fixed before you sign your annuity contract. For the A+ insurance carrier, with a $100,000 investment, you may now be able to get 5% with a 3-year MYGA, 5.3% with a 5-year MYGA, and even 5.4% with a 7-year MYGA. Higher risk, higher return, right? But as I always say, everyone's financial journey is different, and an A+ rated insurance company is still the second best credit rating that an insurance company can get from AM Best, as I mentioned earlier. Always stay under your state guarantee association's threshold, and don't forget that MYGAs are generally not liquid and don't pay regular interest. So, if any of these rates are interesting to you, or if you want to see what your MYGA or other annuity options might look like whenever you're watching this video, email us at jennifer@diamondnestegg.com so that we can connect you with a trusted annuity specialist who can help you find the best annuity solution that's out there for you. If, on the other hand, you're more interested in adding higher yielding opportunities to your portfolio in a controlled manner beyond what annuities and treasuries will pay, come on over and join the growing member community in our VIP investment club, where these conversations are happening every day. Our Independence Day sale ends tomorrow, Sunday, July 5th. So there's just one more day left to save. Use coupon code BONDS2026 at checkout to grab your $100 discount. Remember, our Diamond NestEgg VIP investment club is the ideal place for you if one or more of these points apply to you. 1. You're already in retirement and want to have a forum for an extra pair of eyes for critical questions. 2. You're not yet in retirement but are actively thinking about it for yourself or a loved one and want to get ready to take the decisions that lie ahead. 3. You have questions about how a product works and what the benefits and risks may be. 4. You follow the markets and want to be the first to know about safe and or higher yielding investments. 5. You want to understand new offerings and trends and decide whether they might be something for your portfolio. 6. You want to exchange perspectives with a like-minded community of safety-conscious and income-minded investors who do not want to give up on good returns either. And 7. You're a lifelong learner who enjoys discovering hidden investment gems and sharing with others in a more private setting. So, if you check one or more of these boxes, visit our website at www.diamondnestegg.com and click on this yellow Private VIP Investment Club button to learn more and join us today. The coupon code BONDS2026 can also be used through Sunday, July 5th to get $100 off of a popular bond course bundle and individual bond courses. We've also linked everything below this video for your convenience. All right, Diamond NestEgg members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And see you very, very soon with more brand new wealth building content for your financial journey.